listen to this who they've heard of yield farming, like the terminology. They have
Yep.
no clue how it works. So kind of just walk us through exactly what's happening when people are doing this.
Yeah. So first I'll just say mechanically, there's a lot of different versions of it. I'm just going to talk about sort of a really simplified version of it, and you can put as many knobs on it as you want. But at its heart, what is it? You build a product, and it's a product people can use. Maybe it's a borrow lending protocol, maybe it's a DEX, whatever. Let's for now say that it's a borrow lending protocol. That's where this all started. And what you say is, all right, I want a lot of people to be borrowing and lending from my protocol, right? And what do I mean by borrow lending protocol? Something like Compound or Aave, where you can basically, put in Ether and take out USDT or whatever. There's sort of a bunch of accepted tokens, and you can lend some of them to the protocol, and you can borrow other coins against it. And then other people can borrow the coins you're lending out, and you're paying each other interest for this. So you want to incentivize growth in your project, and you want to incentivize people to start using it, building on it, integrating with it. And so what you do is you say, all right, first of all the revenue is going to go to this token. You create a token, it's the equivalent of an exchange token, a protocol token, whatever. And you say all the revenue from my project is going to this token, with Compound is Comp. And what we're going to do is for the next 3 months, we're just going to every day airdrop 1,000 tokens on everyone who's using the platform, just proportionally to however much you're using it. So however much you're borrowing plus lending out, that's how many points you get, and then these 1,000 comp tokens just get divided evenly between all those people. What happens then is, a lot of people go to use your protocol because they want to get your token for free. So they start borrowing or lending, and they get your token. You give up most of your tokens, or some, or it depends on the project. And they get yield, and what yield means here is basically they're putting up, $1,000 of capital, and every day they're getting $1 of the token airdropped, and so they're getting 10 bips a day, on their capital, just literally putting it there and lending it out. And the yield is coming in the form of the protocol token that's being airdropped on them. And the vision is now all of a sudden all these people who use borrow lending protocols have your token. They want yours to win. They want to build on yours. They're aligned with you. And they provided a value by providing liquidity to your protocol, by providing coins for people to borrow. And so all that's great and helps you out. You help them out. You're aligned. That's the theory behind it. And I'm sort of taking sort of the positive light, the optimal version of this, and ignoring all the bad shit that happens.
Okay, but so when people are doing this, just to summarize, the whole idea is to incentivize users to adopt my product or my network over another one, and therefore basically I pay some rate of return for them adopting that, right?
That's right, over another one or over just doing nothing. But yeah.
Okay. The interest, I think, is, or the return on some of these, I think is where kind of, especially people who come from the traditional world are like, wait, what is going on? Because, the return can be 1,000%, right? Or, exactly. Kind of these crazy numbers. So kind of talk through a little bit. I'm assuming that you believe that that's not very sustainable and will kind of get commoditized down, but maybe not.
Yeah, that's a really good point. And that is where a lot of this shit starts to get weird, is that when someone says that they have an interest-bearing product for you, let's just say, get rid of crypto, right? So it's I got some bonds, they're I don't know, corporate bonds or something, and they're going to pay you interest each year. And you're great, what's the interest? And 6% a year. So you're all right, that's a number that I find plausible. I'm sort of is that better or worse than putting it in the stock market? I don't know, maybe it's a little worse, a little safer, or whatever. Anything between 1 and 15% a year is sort of normal land, and crypto interest rates are higher. There are a lot of ways to think about this, but just generally, crypto interest rates are 20% a year, roughly. So in crypto, you have something that pays 20% a year, and that's actually kind of reasonable. The there are a lot of people who pay 20% a year for capital. There are a lot of people who loan capital at 20% a year. Whatever. So, okay, anywhere between like 5 and 30% is like plausible in crypto. But as you said, some of these are 1,000, and 1,000 is equivalent. Like it's just like that's a ridiculous number, right? Like no one ever pays you 1,000% a year, right? And why is that? Well, first of all, everyone would do it. Also, why are they paying you so much money? Where's it coming from? Like this is way too much. Like you could have said 100, and I would have been amazed at it. Like 1,000, like that's ridiculous. So, sort of your thoughts, like this has to be a scam. Like this is the send 1 Bitcoin to us and we'll send you 2 back type scam, right? And what's actually happening there is, well, mechanically what happened was, yeah, they're airdropping the tokens on the users, and you just do the math. They're like giving away half of all their protocol tokens the next 2 weeks, and that's $250 million worth of tokens are given away, and there's optimistically going to be $1 billion locked in this protocol using it, so then you have 25% over a couple weeks. That's where you get these insane numbers from. And there's sort of a few ways of thinking about this. The optimistic way is like, yeah, time horizons are shrinking. They want their protocol to do well soon. So they're like, we're not going to give it to the next, pass out these tokens over the next 2 years. Let's just do it over the next 2 weeks. Why wait? So yeah, it's a ton of yield for 2 weeks. We're giving away most of the value of the protocols to users, and that's the trade we're making in return for getting a lot of users. And it's still a little weird because people should be putting a shit ton of money in. Like that should be drawing $100 billion out to make the return more reasonable, right? Like that's sort of the optimistic take. The pessimistic take is like it's a scam, or it's not really 1,000% a year. And what does that mean? Well, here's an easy way to give it an insane yield. You just take a token, and every day you double the number of tokens. You just mint another entire new set of them and airdrop it on the current token holders. So yeah, you're given 100% a day, but obviously the price is crashing. Like it's just a hyperinflating token. You're not actually giving out value there. And so another thing that might be happening is that the token's price is actually crashing just as fast as it's paying yield. So you don't make money for doing this. Or maybe it's a scam. They're going to steal all your money somehow. And so those are sort of the pessimistic takes.
Are these just like the new ICOs?
Yeah, I mean, they're not exactly the new ICOs. Like, I mean, there's differences, and everyone will come up with like their own, sort of reasons for why they're different. And
not structurally, but just in the sense of using a new mechanism for capital markets and incentives and kind of acquiring users. ICOs was one version. This seems just like a second version, and that's not passing judgment on good or bad. It just is what it is.
Right, and I think in the end, my answer to you is closer to yes than no. Mm-hmm. My answer is sort of like, yeah, these kind of are the new ICOs. Like that's actually not a bad way to think about it, and whatever, there's a lot else going on there, obviously. Like it's not that, but yeah, at its heart, these bear a lot of resemblances to ICOs.
And it also feels like there's this game going on. Like in my opinion, there's people who I'm probably closer with that would say, Bitcoin is the only thing, nothing else matters. All this other stuff is, frankly, garbage and whatever. What I think is interesting, though, is if you say, okay, like that is one view of the world and probably more right than wrong in terms of Bitcoin having immense value kind of moving forward. But there's also this like kind of thought process of, wait a second, there's a whole bunch of financial engineering and craziness going on here. If you're a pure capitalist and you say, I have no emotional connection whatsoever to any asset, you can make a lot of money, right, and drive a lot of returns. Yeah. If you almost come at it like from a hedge fund perspective, where a hedge fund says, I don't care what the asset is, all numbers on the screen, and basically I'm just looking for things I can buy low that go up and then I can sell higher and make a return. That seems to be the people who are thriving in this environment.
Yeah. And there's sort of, I know I've retweeted this a number of times, although it's not actually my quote. It's a group CMS. It's a cool firm who coined this, but sort of, do you want to be right or do you want to make money? And there's sort of this thought of like, all right, you can use your words. You can say whatever you want, and I'll be here making money because I'm going to go yield farm, and you're not going to yield farm. And we'll see who wins. I don't know what winning means, but I've guessed about who's going to end up with more money. That's sort of maybe what you're getting at there, which is put aside all the moralizing and all the philosophical aspects of it and the projections, and just say can you make money yield farming? The answer is yes, you can make money yield farming. You make a lot. You don't have to lose a lot. I mean, it's if you just yield farm scams, then you're just going to lose all your money. And if you don't understand that tokens can crash and that their prices can move, even if they're not scams, then you're going to end up yield farming in all the pools that are probably going to crash. So it's not like you can only make money doing it, but there were ways that were actually just not that risky.
And so how much money can be put to work in these strategies, right? There's a lot of people who, kind of come from the traditional Wall Street world, and they say, hey, if I can't put, $50 million into the trade, then it doesn't matter, or hundreds of millions of dollars. My understanding is you can't do that, but you also can do more than, $10,000. And so kind of talk through your experience with how much capital can actually go into some of these trades.
Yeah, it's a really interesting question, and it's really different for some of them than others. You find a new project that has sort of nothing in it, and if you put in $1 million, you'll double the total amount of money in it. You'll have all the returns, and no one's going to be there to buy the tokens you're farming. So some of them, the answer is you can put 10,000 in, and if you do a whole lot more than that, you're just killing your return. There's others, different ones are different sizes, and sort of what you should be thinking is a combination of two things. First, how much yield in dollars is being handed out? Not in percent, but in dollars, right? If someone's handing out $1 million total of yield ever, there's just a limit to how big you can do that trade, right? If other people are doing it too, you're all fighting over that. You're not going to have $1 trillion at work trying to do that. If someone's giving out $1 billion of yield, I mean, it's worth tying up a lot of capital to get that. The other way to think about it is just how big is the world doing this? How much impact will I have doing it? How much liquidity will there be in this token everyone's mining? Can I sell it? Not that you necessarily will sell it, but can you sell it is sort of the ultimate truth of is it real money, right? If you're getting all this yield, but you can't sell the yield, it's sort of a sign maybe the yield's fake. But if you could sell it, then even if you don't, maybe it's kind of real. And so anyway, to answer your question, on the low side, almost none for some of these. On the high side, well, you can sort of look at the numbers, and there's a lot of different numbers you can look at. One of them, right, you can look at the Sushi-Swap migration and how many funds moved with it, how many funds it grew to, how many moved back. It's not clear exactly what the right number to use, but they're all in the same order of magnitude. You can look at how many funds got locked up in Compound at its peak when it was the only one doing this. You can look at how much is in Curve. I mean, there's a lot of versions of this if you look at the biggest ones out there. And the number's about $1 billion. That's about how big the world can do this. Probably more. Probably a few $1 billion worth of funds. And it sort of has to be that big because there's been $1 billion handed out. And if you could have gotten all of that for $100 million, that's a ridiculously good trade. I mean, there's a lot of ridiculously good trades, but 10xing in a month is pretty good. And so then you say, okay, but you couldn't actually put that much at work, right? Come on. No, I don't know. I think kind of you could. It's really big. It's really big. It's now again not everything, right? Only a few of these pools have enough to be.
You described okay, there's some that you could put $10,000. From what you've seen, and you don't have to use names, but just what's the biggest single opportunity from a size standpoint you've seen?
Yeah, single pool $1 billion. It's that's about the biggest they've gotten. If you look at how much DAI was being, you had many hundreds of millions of DAI in Compound at one point. You had hundreds of millions of dollars of BAT in Compound at one point. You had, you've had $1 billion in Sushi-Swap. You've had $1 billion in Curve. Balancer had hundreds of millions of dollars yield farming. Yeah, I think $1 billion's about as big as the biggest single pool has gotten. Now, obviously, if you put another billion in there, you're crushing the market. But, if the question is like, could you put $50 million to work yield farming? Yeah, the answer is yes, you could.
Okay. You're saying that with a smirk on your face, so I won't ask any questions. But let's talk about Sushi Swap. Absolutely. Like, this to me is like the epitome of just chaos in crypto.
Oh yeah.
In every positive way and every negative way combined. In one thing. Tell us kind of just your perspective of what's played out so far.
Oh, it's been a fucking soap opera. I mean, it's insane. I thought that I'd seen some insane things, but this is so much weirder. So yeah, it was one of the yield farming pools. They did their yield farming on Uniswap, and I think they kind of did two things that other yield farming didn't do. One thing is they chose a really good thing to yield farm. Most yield farming is not done on Uniswap, which is weird if you think about it, because what product is the most used product in DeFi? Like, it's Uniswap. Mm-hmm. What product would you guess would be the highest revenue product in DeFi? Well, not Uniswap because it hasn't turned on revenue. But if it turned on revenue, then maybe Uniswap, right? Like, exchanges, and it sort of fits. High volume, it's an exchange. I think it's like an underrated point that, like, if you look at what like Curve has maximized the hell out of their position, and they've done an amazing job doing what they are. What they are is a stablecoin to stablecoin liquidity pool. That's like not an incredibly high grossing field in crypto in general, right? Like, they've done amazingly given that that's sort of like what they've done so far. But all right, so first of all, yield farming Uniswap, yeah, okay, that seems like enticing. And the second thing that they did was they had this cool idea. Well, some people think it's blasphemous. Some people think it's awesome. Whatever. It's whatever you think. It's potentially powerful, which is, if your goal is to incentivize usage and to kind of get a user base and grow it out, what easier place to do that than on a current version of the product? So what it did was it started out not by building SushiSwap, the exchange, but by just having people farm sushi by using Uniswap. And sort of the natural crowd then to give sushi to, and then to fork and create SushiSwap, another DEX. So it made a few interesting decisions that I think like were powerful, if nothing else. And it gained in popularity, and it became like the biggest yield farming thing. One of the biggest by returns, but the biggest by prominence I think that there's ever been.
How much of that is driven by the meme and like the name and kind of the like Twitter,
right,
GIF lords taking over and really pushing it?
Well, certainly some of it is. Like, that was definitely a driving factor, but I don't think it was the only thing. I think it took off because it had a really good medium to grow on, which is like, something trying to become one of the preeminent DEXs. And if DeFi's booming, probably DEXs should be. It's actually surprisingly few of them. It's, you can kind of think about what you think sushi should be worth. I don't fucking know, but like, you come up with a big number if you make the right assumptions. It's like it's not it's not like it's obviously just a dead coin eventually. Sort of backing a real product and type of product that has potentially high upside. So it had a good substrate to grow on, but then also had great memes. Not the best memes. I think Based has better memes, but good memes.
Good memes are good enough.
A solid A- on the memes. To go with like a solid A on the product. And so, okay, sure, As far as food coins go, that's way ahead of the curve. Like, the curve is like, B and D- respectively. So like A- and A is really good. Okay, so it got huge. Sushi was huge. Sushi was like one of the most traded coins in the world. Second most, maybe caught up to Ethereum one day. I don't know, it's like right around Ethereum level. and ran up a lot. Whatever, it's huge. And everything was I don't know if humming along is quite the right word. It's like a sort of massive, like volatile, uncertain kind of clunky thing, but it is big and growing. And then I sort of was on the outskirts of it, in that FTX listed it. It listed sushi, and Alameda farmed some sushi, and then it was about to have the Great Migration, which is like this point at which sushi swapped the exchange. The DEX was going to become a thing. It was going to fork off from Uniswap and try and migrate people's liquidity from Uniswap to SushiSwap. And like a day and a half before that, Nomi, the face behind the project and one of the founding developers, I took the treasury, and that was not well received.
And took the treasury, for those that don't know, means that all of the money that was sitting there was converted into ETH, and like took it personally. Right.
And to be clear, it's not like the user funds that were there. And it's this thing that doesn't exist so much in centralized finance, but it's sort of the project treasury, like the funds to be spent growing the project out, So it's not like they stole all the users' money. That would be like really bad.
Yeah, it basically was the idea of what was being airdropped was coming out of a bank account, right? And they took a bank account, so it was not something that users had given them. It was something that they kind of had created, but it had value. It ended up being, like $13 million or something.
Yeah, that's right.
And was not well received.
That's right. It was very not well received, and the world realized, shockingly, right? The world realized a lot of things at the same time. The first was, oh shit. The second was, oh, we probably should have had a more in-depth conversation about what the purpose of this. It was the dev fund, the treasury, like sort of pool of stuff to grow the platform, what it was and whose it was, and maybe we should have rushed to get a multi-sig control if it was just Nomi's sig. But also maybe rather than rushing to, at least we should have like clarified the ground rules for it. No, there have been some sort of informal verification of rough ground rules, and it is not exactly adhering to them. Like this is not what anyone had thought was sort of going to happen or communicated at all. And so it was, sushi crashed hard. The market crashed hard. And the community was furious. Nomi seemed a little confused. I think, like, certainly reading Nomi's Twitter, like, if you take it at face value, like, they were not expecting the backlash that they got. I think they should have been expecting, but they were not. And Sushi was sort of like nearly dead. And it's weird, like sort of, it all kept going on as it had before, except the token had crashed and everyone had lost their confidence in the founder and the project, and there's no more treasury. So okay, not great. And it was like, it's sort of amazing that there hadn't been huge, like, rug pulls or thefts in DeFi so far, that like none of these platforms had lost $1 billion in them. But still, 14 millions, that's not that's real money there. And and that was sort of Sushi went from the hottest project in crypto to toxic in an hour.
All right. So when all this happens, I was not paying a lot of attention. Then all of a sudden, when it started to like really, really go up, people started tweeting it at me. So I kind of spent my obligatory 20 minutes Googling. Okay, I kind of sort of understand it just enough to know what bucket to put it in mentally, but didn't really go deep on it. And then all of a sudden, when the treasury was taken, literally my feed was just filled with anger, hate, laughing. I mean, just every emotion in the world coming from different people. The "I told you so" crowd. The "somebody stole my money because I don't understand what actually happened" crowd. The the token went down.
Yeah.
I mean, just everything. And so I was like, okay, that's probably not a good development for a lot of people. And then I don't know, 24 hours later, somebody tweets at me and says, "Hey, it's been transferred." as a project to you. And I was like, wait, what is going on? So kind of how did that happen, and what exactly happened, I guess?
Yeah. That was pretty fucking wild. So yeah, I was I mean, I, like many people, were not excited about the developments with the Treasury. I think I was like a little more sympathetic than some people were, just in that I thought that there was legitimate ambiguity about what had been intended. Not that I thought this was an appropriate use of them, but that I also sort of felt like legitimately, like, people didn't quite nail down what the plan was for it. And also that, like, Nomi seemed legitimately not to think that this was going to be perceived the way it was. Like, there seemed to be a real, like, this wasn't sort of like him saying lullaby. There's like a real disconnect here. But also sort of destroyed the project, and also was the wrong thing to do. And like, it was also not selfishly the right thing to do. I mean, it's made everyone worse off. It's bad for everyone. Like, it's, and the honest truth is, if like he had never done that, and he just like worked really hard for the project and made it be a great thing, and then eventually was sort of like, hey guys, like I think that, like, I should get a percent of the tokens. And I think people would have been like, yeah, that sounds right. That sounds like you deserve that. And could have ended up with more than they did. So
how does it get transferred to you?
Yeah. So I wrote some tweet threads expressing my displeasure, and basically saying, like, you gotta fucking transfer control of this project or it's just dead. Like, no one is gonna have faith in it with you with the keys. Like, sort of like, anyway, I sort of like, that sucks. Like, that's sort of it for sushi. And I don't know, took a nap, and I was like on a beanbag by my desk, and sort of just shouted out, like, hey, someone just tweeted that Nomi said he was going to give you the keys. And it's a weird moment. But I don't know, I kind of got up and, bolted to my computer, and in fact, someone had tweeted a screenshot of Nomi saying he was going to give me the keys to the Treasury. So that's pretty weird. And I mean, it was like, kind of like an even more bizarre twist than the previous twist of him having taken, like sort of like, was like a really strong negative twist, and then an even weirder positive twist. But yeah, I mean, I don't know. He then did it. Like, he sort of sent the keys to the Treasury, and that sort of changed my weekend plans. I mean, whatever I had thought I was going to do, it wasn't figure out how to do a sushi migration. But remember, the migration hadn't happened yet. Like, that still had to happen, and it was actually kind of a tricky, intricate process. And I mean, I hadn't written sushi swap or anything. It's sort of like, so all of a sudden it's like, okay, like, I guess what's happening this weekend is that we're going to go figure out how sushi swap works.
You still have control, right?
So we have, so the key was passed, and it's sort of like technological control over some parts of it, although, as sort of dictated by votes of community members. But that control is transferring to multi-sig control. Okay. Sort of step one, and that transference is happening maybe tonight. We have everyone's address now, and last I checked in, we're preparing it. So that's going to be sort of the next step for the next step for Sushi in sort of formally removing me of control, which is sort of important to it because it's not SamSwap, and it's not I'm not meant to run it. I don't run it. I don't like. It's sort of like the keys were dropped on me, but that's not. It's meant to be the community's project, and so.
So you have no plans. This is not going to become the next product line of Alameda is to go and.
No, no, this is not, and it sort of can't be because that's not like it would involve fundamentally changing what SushiSwap is. Like that's if I like at some point Serum might create it or FTX or something might create an AMM, a DEX, something like that. But as Serum did create a DEX, but SushiSwap sort of dropped on my lap, and I want to be sort of faithful to like what it was meant to be and what people thought it was meant to be when they got involved in it.
Got it. That makes sense. And so let's zoom out for a second. You have your hands in Alameda, FTX, the whole SushiSwap saga. You kind of have a front row seat to a lot of things that are going on here. Just so people understand kind of where you see opportunity, maybe just talk through, like on a percentage basis of your time and mental energy, how much of it is on the exchange, how much of it is on trading, how much of it is on like the DeFi world. Just how do you kind of think through maybe the prioritization of these different things, and I'll use your time almost as like a proxy for kind of focus and energy.
Yeah. So basically, it varies, right? Like a week and a half ago, the answer was 0% on sushi. That's not a thing. And in a week, it's going to be not 0% on it, but
very little.
Very, very little. It's like, so that's sort of like a little bit of what's the word? Like a, sort of a weird
outlier.
Yeah, a weird musical interlude in the middle of, but I've been spending most of my time on Serum and FTX, and so, on the, doing sort of a combination of management and product vision and things like that, and also a lot of low level stuff. I mean, sort of like a tricky support ticket comes in, and like it's sort of not clear what's going on exactly. I'll often take it, and so I would say, recently it's been majority on Serum, some on FTX, and then just sort of general oversight of Alameda, but not a ton of day-to-day intervention.
Got it. Where can people find you on the internet and find out more about FTX or Alameda?
Yeah, so I've decided that a good, as someone with recently one too many projects on their plate, a good use of my time is shitposting on Twitter. So that's where you can find me. I'm SBF_Alameda on Twitter, and I'm tweeting way too much.
It's okay.
So that's the easiest way to find me, and then FTX is at ftx.com. Serum, if you go to projectserum.com, you'll find a helpful website with a bunch of links to stuff.
Got it. I end the podcast with the same two questions for everybody, and then you get to ask me one. All right. The first is, what's the most important book you've ever read?
Oh, boy. I mean, I'm going to be honest. Like, I don't really read books anymore. I mean, I think, like, I liked fantasy books growing up, but they're really long. And I mean, I think that I don't have that long of an attention span, but even more than that, I think, like, the world has sort of decided that, like, there are more efficient ways to convey things often. And I sort of agree. So I guess, I'll say rather than that, maybe some blogs that I like, okay. Which are there's Money Stuff. So Matt Levine's blog. If you like reading about finance, it's the best. I mean, it's just it's, in addition to being super helpful and useful, it's completely bizarre and has like wonderful anecdotes. And I think that's probably probably my favorite, regular blog. And then I also like a lot of the 80,000 Hours, if you're into effective altruism, has a lot of good pieces coming out about what you can do with your life. And yeah, and outside of that, I sort of like shit post on Twitter and stuff. But in terms of media, I think it's pretty much that sports and Netflix. So,
second question, it's more fun. Aliens, believer or non-believer?
Oh God, I mean, it's like I certainly would not assign 100 or 0% probability to it. Although some calculations will give you 100%. Sort of, I would not say like. I don't know how to think about this one exactly, and I definitely get like contradictory answers. Like one way to think of this is you just sort of like are like you serve any reasonable model and then multiply by the number of planets, and you get that they definitely exist. Like there's no chance they don't. And then you sort of take a step back and you're like, okay, but we've looked at a lot of planets and none of them have it. Like you're saying that any reasonable model would have assigned effectively 0 probability what we've seen, and then you say no, it's like there are these reasons that makes sense. I have not thought hard enough about this to reconcile it. I will say that I would say more likely than not that there is something, although that something might be like seaweed or a variant on it, or more likely something maybe even less like it. But I don't know, I would say more than 50% chance that there's some life on some other planet, although probably less than 50% that it's like us.
I think that's a fair answer. You could ask me one question to end this. What do you got for me?
Yeah, which coin have you most regretted buying, and which coin have you been most proud to have bought?
Bitcoin by far, in terms of kind of most proud. I guess the emotion of proud. I don't know if I necessarily think of that as like a
right.
Hey, I made this financial decision.
Accomplishment, right?
Yeah, but Bitcoin would be the positive answer there.
Yep.
Early on, in like, I don't know, 2017. I actually don't even remember. Like, I never really kind of waded into like what I'll call the crevices of crypto, that the super illiquid stuff. But when Ether went from like 10 to 30 to like 100 in the spring of 17, I just didn't really have nearly as much education and knowledge and like thesis and conviction and all the things that like now I think if you were to talk to me and say like, why do you believe what you believe, I couldn't have articulated any of it right then. And to be honest, there were probably things that like I bought and it was never big amounts, but it was just like I was more like buying it because everything was going up. I kind of feel like it's like stock investors today, right? Like you just put money in anything and it goes up.
The index,
and so that was short lived. But that's probably the answer. It's just like there was all kinds of.
It's like a coin whose name you can maybe not even remember now. Like
and it's like dumb stuff, right? It's like, Bitcoin's worth $2,000, so like this other one's worth $300. Like, are they going to go? Is it going to go to 2,000? So it's just super unscientific, more entertainment than investing, frankly. But that's probably it. All right, Sam. Listen, thank you so much for doing this. This is absolutely fantastic. I think people will love this. And
thank you.
You've built some amazing businesses in this space. So please keep going, and we'll have to do it again in the future.
Absolutely.
All right, guys, bang, bang. I have the one and only Mr. Jim Cramer here. What's going on, man?
Bob, I got to tell you, it's one of the most exciting times of my life because why? We have an intersection of sports and of stocks like I've never seen. It does seem like every game is a championship game, and every stock day is a day where people reconfigure and say, you know what? this is the worst day ever. This is the best day ever. So when you get this level of excitement, when you get this level of schizophrenia, what do? You want to call the biggest schizophrenic in the world, and that's me.
I love it. All right.
Wow. You know what month is the most important month?
Which one?
May, National Mental Health Month. 2 cheers.
Before we get into what you're doing now, you have a whole life before CNBC, media, etc. Let's just start with kind of your background. You went to Harvard. You spent a bunch of time as a reporter. Then at some point you managed a hedge fund. Just tell us that story real quick for those that don't know.
Okay, so I get out of Harvard. I don't get my degree, of course, because I criticized the guy who gives you the diploma. He just waved me off the stage. My folks, first generation, my folks are there. They're crying. Didn't get my diploma for a month, so I got a late start. Then I went home and I was determined to try to get a job. I was rejected by 57 newspapers. I kept every rejection. Most of those are out of business, so I'm still here. What I think was really important was that the Phillies were having a great year. And I was determined to watch every single game. I forgot that you have to work. So my mom turned my bedroom into a den and told me to get the hell out. So I moved to Washington to be with my aunt, worked for Congressional Quarterly, where I was the key operator, meaning that I had to operate the Xerox machine. That's true. That was my job. I applied to a million papers. I ended up getting hired by the Tallahassee Democrat because, I don't know, it was for $19,000 a year. That seemed like a great amount, and which it wasn't, by the way, even in Tallahassee. And I get down there, and I'm covering sports, and I'm covering FSU. Bowden had just gotten down there. I tried to do an investigation of the NCAA and how they were handling the grade degradation of the football team. They weren't doing it as well as you'd think. And I realized it to be a bomb under my car. So I very quickly pivoted and wrote about Florida A&M and Florida State. And then I had a terrible break. I say terrible because I ended up living down the block from where Ted Bundy killed those girls. And I did some reporting that got some notoriety. That got me hired by the LA Herald Examiner, where I really, for a long time, covered homicide. Not a great beat. And when you're too cynical about it, it's time to move on. Then I moved back to New York. I was having some health problems that were directly related to a huge amount of drinking. I say that because I had a gigantic size of Greenland Mercator projector yellow stain, which I thought could wash off, but my doctor, who is a farm workers clinic doctor, he explained to me, no, Jim, in order to get rid of that, you have to do something that you may not want. And he said, do you drink? I said, occasionally. And he said, what do you mean by that? I said, occasionally in the morning, occasionally in the afternoon, occasionally in the evening. So I got my life together, and then the rest is kind of good history. Went to Harvard Law, got hired by Goldman, left to be a hedge fund manager, and then started TheStreet.com in 1995.
All right, so let's start with hedge fund world. While you were doing that, what was that environment like? 'Cause this is like late 90s into the early 2000s, I think, right?
Yeah, I left. There were only about 100 hedge funds when I left Goldman. I left Goldman in February of 87. Got it started, had a lot of, I don't know, had about like 40 million under management, which was a lot then. Had a partner. We had a tremendous dispute. He left. My then girlfriend, who ultimately became my wife, and then ultimately became my ex-wife. There's a journey for you. Started working with me and told me right before the crash of 87 that this market was going to crash. And we went to all the gray beards, and they all loved it. Said, no, it's great. Markets pull back, gotta buy. But we sold everything. And because I was in cash for the crash, I had a head start on everybody else for years because people kept giving me money saying, well, he knew to get out of the crash. And I ended up doing pretty well, made a lot of money. It was fun. Gave it most of it to my wife in the divorce, didn't want to have a big fight. What can you do? I mean, that's real life. And started over.
Got it. And so when you say you started over, was this, you went and did another hedge fund, or this is when you started the street?
At the age of 50, the street had been going on for a while. It's when I did start making money. But look, I mean, divorce is something people don't talk about because it's very tough. And I felt very sad about it. And I speak to Karen. I haven't spoken to Karen yet today. I spoke to her yesterday. But it is, it's very, very jarring because there's no handbook. And I ended up marrying someone that I met on a blind date about 8 months after I broke up. There's a terrific article. If you Google the New York Times, it was #1 in the New York Times for 2 straight days about how amazing Lisa Detweiler is. It was our wedding announcement, and the wedding announcement got a lot of attention. I'm very proud of that, even as I'm not proud at all about the divorce, obviously.
Absolutely. And so tell us the story of starting TheStreet.com, because I think that you've been way ahead of a bunch of these different trends that now everyone's talking about. And by way ahead, I mean literally in some cases 20 years. So tell us that story of why you started it and how you guys kind of built it.
Okay, so in 1991, I helped start Smart Money. And Smart Money then immediately became, wasn't me, it was also Jim Stewart, the great writer James B. Stewart. And we just had an unbelievably good time. It was one of those things where I realized that Steve Schwartz, SWRTZ, was visionary, and he got us together and said, listen, I want to do a magazine that is about making money in stocks. Our first cover was like Finding the Next Amgen, and it had a submarine. We were very single stock oriented, as opposed to all these idiots now who do all these ETFs and say it's dangerous on single stocks. Those people are charlatans. We'll get to them later. So we were coming out once a month, and I went to the editor and I said, you know what? There's this thing called the web. This is after 4 years. And we can come out every day. We don't need to come out in the month, and we don't need any delivery people we can go up against even the Wall Street Journal. You don't need trucks. You don't need dead trees. You know this. And they said, that's a great idea. We'll buy it from you for $400,000. I said, no. I mean, if you're going to buy it from $400,000, I'll just go do it myself. So I quit Smart Money. I took the money I was making at the hedge fund, and I started The Street with my friend Marty Peretz. And the first thing we did was Marty said, let's get the best guy in the world. So I went to Michael Lewis, the great writer. He came out to my farm in Pennsylvania. We had a handshake deal, and I never heard from him again. Inauspicious. But then what I did was I happen to believe in young journalists. So I went to the editors I just looked them all up, of every single major college paper in the country. And I offered them stock, and all of them today, they're all working at great places. Like Alex Berenson's doing great things, and I've got from Reuters and Dow Jones people all over the place who are high level and are doing great things now that where they really got their start. And I was very proud of the fact that even Dan Colarusso, who's our editor-in-chief, worked there. We had some amazing people over the years. Came public in 1999, one of those ridiculous moments where our stock opened at 60 and then went to 1, with occasional moments where it stopped. Before Paul Allen put some money in, got the stock up to 4 or 5. We had a series of CEO changes and kind of went to hell. Got some money again from TCV, which is the first investor in Netflix. They're fantastic guys. And that really didn't work out because it came in at 14. That was the level. Stock then went all the way back down again because we kept being advertising oriented. Ultimately, it became subscription oriented, and that's where the money is. People didn't realize that. A lot of rancor, a lot of ugliness, not good, a lot of heartache. Was it worth it? Here's what I say. I gave hundreds of people health care insurance. And so therefore it was worth it. That's what I did, and I'm proud of that. Anything else? No. I am proud that a lot of people got health care insurance, and that is the best sing pomp that I do.
That's awesome. And so obviously you've been ahead of 2 trends, right? So one is the subscription kind of media trend where you guys recognize that fairly early. And then the second is kind of this personality or what is now being called creator-driven content. So let's start with the subscription first. You really, it sounds like, came up with the subscription revenue out of necessity because the advertising revenue just kept being so kind of lumpy and so much fluctuation, right?
Amen. I mean, it went from like 26 million to 12 million. We were desperate. I quit the hedge fund. Again, rancorous, sadly. Pre-medication, a lot of rancor. And then I realized, look, if we don't have a subscription revenue based on personality, as you said, we're not going to make it. So I started doing real money, which people paid for. None of the venture capitalists wanted us to do that, but it was only real revenue. And I realized I was writing on real money, and people kept reading this one column where I was offering action alerts. You would get an action alert on real money, it'd be a red arrow, and people would then say, Jim, I wish we knew more about those. So I started ActionAlertsPlus.com, which is by far the biggest moneymaker that we have. I fought a lot of the CEOs over having a subscription model. I one time even tried to buy the subscription business from a CEO who will remain nameless. And at all times, there was tremendous tension. At all times. And it was kind of like a jail. It was a jail where I ended up making a lot of money. I admit that. But it's the subscription business is a bear because you got to be there every minute. I'm very lucky to have Jeff Marks at FEMA to back me up. We turned into a club. That was important because we can't tend to do what we'd like to do because of the restrictions I have at CNBC for the charitable trust. So we offer a club. We offer different recommendations. You have to know your suitability. But mainly we try to teach you. These people who are Robinhood people, the 13 million strong, they should all, I was trying to figure out, do I do a skinny version for them? Because they desperately need the education that we provide. I'm very proud of the club, even though it's probably the biggest time consumer I have other than Mad Money.
Talk a little bit about, I know that you're very big on the financial literacy, right? Just the absolute lack of financial education that both our schools have, but then ultimately what ends up our population. Talk a little bit just about that problem and kind of